All right, good evening, everyone. Thanks for tuning in today. And by the way, let me confirm if I'm recording. Yes, I am. So today we're going to be talking about prop firms. So if you're tuning in, if you're joining us today, it's actually nice to have you here. I can see my microphone is beeping, so I want to believe I'm audible and you can see my screen. All right. So I can see two hands raised. Please, if you can hear the sound of my voice and you can see my screen, I need additional three hands raised. If I see that, if I see those hands raised, then I'll know that you can hear me. All right, cool. All right, perfect, perfect. Thank you. So I'm going to just kick off from here. Then along the way, I'm going to take questions. All right. So during the webinar, if you have any question at any point in time, just put it down somewhere. Shortly, I'm going to be taking questions. All right. So today we are going to be talking about prop firms, and I believe we are all familiar with prop firms, right? This is a popular topic in today's space. As a matter of fact, I usually tell people that now is actually the time to be a forex trader. It's actually a good time to be a forex trader because back in the day, we actually needed capital to be able to trade because you need to have the right approach to trading. Now, some people prefer to put in their $20, $50, $100, even 500, even $1,000 and trade on that with the hopes of doubling that money within a month or within the shortest period of time. And to be honest with you guys, if you do that, you actually are the reason why 95%, it is considered statistically in the world that 95% of retail traders lose money. Because come to think of it, if I have $100 in my account, I mean, how can you preach to someone that is trading $100 to go for realistic targets like 5%, 10% monthly targets, or even sometimes 2%? In cases whereby maybe during the month the market was kind of bad and you ended up with a 2% profit. So how can you tell someone trading $100 capital to go for a 20% profit target? I mean, it doesn't make sense. That's just $2. It won't do anything. So I understand that is the reason why many retail traders risk more because they are trading a lower capital. And thankfully, we now have prop firms. All right. So today is, of course, the 19th of March. And as you already know, my name is Shola and your host for tonight. All right. So before we jump in, because some people have doubts about prop firms, some people have doubts about prop firms. So I'll just take you through some of my last month's withdrawals and maybe a few from some other people. All right. So this is last month. This is with Funded Next. I'm using Funded Next as a case study. I'll tell you why down the line. They are also a reputable prop firm, and there are a host of other reputable prop firms out there. We'll talk about that as we progress. By the way, today's session is going to be a very, very brief one because I'll try to be as straightforward as possible. Okay, so this was last month. This is another one, as you can see. Then this is from one of our students from our last cohort. Uh, this lady did well. I mean, with a small capital, she did well. Give me a moment, yeah. With a small capital, she did well. So, and then this is another person. I can go on and on, but I just felt like if I spend time showing you all of this, we will not end today's session. All right. So, mind you, or let me skip that part. All right. I'll skip that part. I'll talk about it later. So, but what is a prop firm and how does it work? Now, I'm just going to, I know most of us are familiar with prop firms. You probably already know how it works, but for the sake of those that probably don't know what is a prop firm and how they work, I will just, within the next 1-2 minutes, talk about what a prop firm is. So We have two types of prop firms actually. We have the internet prop firms that we are familiar with in the retail space, and we have the other types of prop firm. I consider them brick and mortar prop firms. Like, they are big guys, right? They have offices. You can go there. They have a trading floor. They employ traders, right? Maybe mentor them and then trade their funds. All right. So we are not talking about that type of prop firm. Now we're talking about the one available to us, the ones where we need to pay certain amounts, to be able to gain access to a certain capital and then trade it. And if you're profitable and if they are a reputable prop firm, you can actually withdraw from them. All right. So that's the one we are talking about tonight. So how do they work? They work. You actually pay it down. You make a down payment. All right. There are different account sizes depending on the prop firm. Like for Funded Next, I think the lowest is $6,000. So they have 6,000, they have 10,000, they have is it 15,000 or 20,000 or so. They have 25,000. Just different capital. So the higher the capital, the account balance, the higher the amount you need to pay to be able to gain access to that account. And once you pay, for those that have not tried prop firms ever, once you make that payment, they are going to email you your login details. They'll send you your account number and your login details. So you are going to log in on either your MT4 or MT5 platform, depending on what platform you choose when registering with them. All right, so they are going to send you that login details. Then you can log in. Then you will see the account balance you paid for, and then you can start trading it. And trust me, if you're profitable with it, and they are a reputable prop firm, because there are lots of fakes out there. Because the honest truth is, the prop firm space is not properly regulated yet. So that is why these guys, they try to scam us out of our money, which is one of the disadvantages of trading prop firm. But if you know what you're doing, and personally for me that I've been in the space for quite some time, I can tell you the reputable prop firms that will hardly deny you your payout. All right. So when you're choosing a prop firm, you want to go to a reputable one that will actually pay you out. All right. I'm going to list some of them as we progress. All right. So that's basically what prop firm mean. Then another misconception that many traders have is, do they give you real money? You see that, yes, you made a down payment and they sent you a login details. Now you can trade their money. Is it a real money? To be honest with you, it's not real. It's actually a demo account. All right. So are they going to pay you out? So how are they going to pay you out if you make money? Yes, they are going to pay you out. Which is part of the reason why when I am looking for a prop firm and I hear, hey, we fund you with real money, I run away from them, because that's a lie. Come to think of it, I mean, we are reasonable, we are smart. You should be able to read between the lines. I mean, I don't know you from Adam. Then because you paid me $60, then I will just give you $50,000 of my own actual money. In an industry where 95% of traders lose money, from a business perspective, does that make sense? It doesn't, right? So that is why they give demo accounts. Of course, there are instances whereby if over time, over a long period of time, you can prove that you're a profitable trader, they can actually book you. That's actually put in real money on you, because you've proven yourself over time, over a long period of time. And I'm not talking about 1 month, 2 months, 3 months. I'm talking about anything above 6 months, 1 year track record. You're consistently profitable, they will book you. Consistently profitable on one account. You understand? So they will actually book you. But I'm not talking about that. From the jump, when you pay for an account, what they give you is a demo account. Don't let anyone deceive you. It's a demo account. All right. But whatever profit you make, if they're a reputable prop firm, they will pay you out. All right. I showed us some of my recent withdrawals and some from students from the most just concluded cohort. Right. So now the next question amongst traders is trading with a prop firm better than using my own capital? Well, it depends, right? If you are from a wealthy family, I'm not, right? If you're from a wealthy family and you think you have some money saved up, You can actually go into the market with 10K, $20,000, $100,000. Then you don't need prop firm. Why? Because prop firm come with their own restrictions, but when you're trading on your own account, you can actually take bigger risk, right? Because personally, when I trade on my personal account, I risk anywhere between 3 to 5% per trade. Whereas when I'm trading on prop firms, I only risk around 1%. Though I increase the risk if I'm in profit and reduce the risk maybe when I'm in a drawdown. All right, just need to know how to balance the risk. So it depends. So if you have enough capital, then go in with your actual capital. But for most people, I want to believe 90% of traders in the world, I mean, in the retail space, don't have that kind of money. So it only makes sense that instead of you putting in your $60 in a brokerage account or your $100 in a brokerage account and you can't trade that kind of capital realistically, to be honest. Let's be honest. Because realistic trading is targeting 5%, 3%, 10% per month. Of course, there are good months where you do way more than that. I do way more than that, but I just want to keep it simple. All right. So let's say 5%. So what is 5% of $100? That's just $5. And you would agree with me that that will not pay anywhere near your bills, no matter the country you live in, right? So that is why when you are trading that small capital, you are most likely inclined to want to take on more risk. And seriously, honestly ask yourself this question: how has that fared with you? Yes, you go on YouTube and you look for all those videos that tells you how you can do 1000% on an account and you try to replicate it. Have you been profitable? If you have not, if you've not been profitable doing that, then you are just chasing shadows and you keep chasing those shadows for as long as until you wise up. So to be honest, first of all, you don't even need to start trading if you don't have the skill set, if you don't have a rules-based strategy and the discipline to stick to it. Now, once you have that, why trade a small capital of $100 when you can purchase a 10K account or a $15,000 account with that same amount, depending on the prop firm, of course, because some prop firms are more expensive than others. So let me peg it at 10K with $100. All right. So with that $100, you can get a $10,000 account. Okay, if that is the case, then I think someone just messaged me that my screen is locked on my withdrawals. I'm way past that. So if that is the case, maybe you need to just drop off real quick and rejoin. All right. Someone just sent me a DM saying my screen is locked on my withdrawal. So just drop off and rejoin. Let me reconfirm if I'm actually sharing my screen. Yes, I am. So just drop off and rejoin real quick. Could be your internet connection. All right. So back to what I was talking about. So when you, instead of trading that $100 and wanting to double it, because trust me, even if I'm the one trading a $100 account, I will want to double it because I can't do 5% on a $100 account. That's just $5. I can't do 10% because that's just $10. I mean, it's not going to cover my bills, right? So I want to double it within the shortest period of time. And what happens when you try to do that? You're going for unrealistic target. You're looking for 100% returns, 200% returns within a month, And instead of you to focus on growth, you are now looking for any stupid thing on the internet that supports I'm sorry, I have to be harsh. That supports, let me not use foul language because I'm going to post this on YouTube, right? So you are now looking for any information online that is going to support what you're doing, that is telling you, yes, it's possible to do 200%, 300%. That's BS. All right, that's the wrong mindset to have. So instead of trading putting that $100 in a brokerage account, why not just purchase a 10K account with it, a $10,000 account with it, then trade it responsibly. Now, if you do the same 5% on that 10K account, which you acquired with just $100, I mean, 5% is $500. 5% of $10,000 is $500. Right? Of course, they are going to take probably 20%. You're going to be left with 80%. That should be around 400 plus or $400, which is still a decent profit compared to if you were trading that $100 in a brokerage account. All right? But if you have the capital, by all means, put it in. But $100 is not going to give you what you're looking for in the market. All right? If you want to do this long term, you can. Of course, it's not impossible to take $100 to $2,000. Okay, Titus said, I don't think is the only person that is seeing a locked screen. Okay, let me just look into this. I'm going to allow one or two persons to speak. If you can see my screen, please indicate by raising up your hand. If you can see my screen, indicate by raising up your hand. So I'll allow Mr. Sheung to speak. Mr. Sheung, please go ahead and speak. What can you see on my screen? I just want to confirm it's not from me.
I say it's trading with a prop firm better than using a down.
Okay, yes, that's the slide I'm currently on. So for those that can't see my screen, please just drop off, then rejoin. It's from your end, all right? Because Mr. Sheung just confirmed the screen I'm currently on, okay? So if you feel like you're seeing a previous screen, then drop off and rejoin, okay? So yeah, but if you have a good capital, then invest. I would recommend that you just go with a brokerage firm, then put that money in because you can actually risk bigger, all right? Like I said earlier, when I trade my personal accounts, I risk anywhere between 3 to 5%, which means I make way more money. But when I'm trading on prop firms, I risk 1% and below. All right. So can I trade multiple accounts? I get these questions a lot too. Can I trade multiple accounts? Of course you can. Now the next question is, how do you do that? I mean, imagine having 5 accounts, 5 different accounts, and when you want to place a trade, for instance, let's say you want to take a trade on gold. I lost a trade on gold today. And then it eventually went to my target. So annoying, but I'm not complaining anyways because before that, on Friday, I won 2 trades. On Monday, I won 1. So I'm coming off the back of 3 consecutive wins on prop firms. I'm talking about prop firms, right? So I was 6% up. Then I took 1 today. No. I'm coming from the back of a 4 winning streak. So I was 8% up. Today I blew 1. That is what it is. It's part of the game, right? But anyways, back to what I was talking about. So how can you trade multiple? So let's say you want to take a trade on gold. Now you have 5 different prop firm accounts. You place a trade on one, then you go to the second one and the third one and the fourth one and the fifth one. Now that's stressful. All right. So yes, you can trade multiple accounts. Let me explain that first. Then I'll talk about how you can bind them together, which some of us already know how to do that, right? So yes, you can trade multiple accounts. You can have an account with Funded Next. You can have an account with E8. You can have an account with the 5 Fast. You can have multiple accounts. Now, how do you trade them easily, whereby you just only place trade on one and it copies across the other accounts? I've made a video on this like 1 to 2 years ago on trade copiers, right? So if you need the link, just send me a DM or send us an email. Go to our website and send us an email from the support tab there, or just go to support@letstrade10x.com, and then the link to those videos will be sent to you. Or you can use the WhatsApp icon on our website to contact. Just ask the question through WhatsApp, and then I'll try to send the links to you. All right. So give me a second. All right. So I use those trade copiers to bind these accounts together, so that we call them master and slave accounts. And the good thing about this software is, personally, like I've been saying, I risk 1% per trade on prop firms, right? So let's say I have a 100K account and then I have a 200K account with another different prop firm. Even if, let's say the master account is the 100K account and I'm risking 1% there. When it copies the trade to the 200K account, it's also going to be maintaining my risk there. So technically what I'm saying is if I'm risking 1% on the 100K account and that trade copies to the slave account that is a 200K account, it's going to be the same 1%. So which means I'll be risking 1K on the 100K account. But when it sends the trade to the slave account, which is a 200K account, my risk there will be $2,000. You understand? My risk there will be $2,000. Sorry, someone I think from here is trying to send me a message. I can't respond now, so please bear with me. But if it's a question, just go straight to the points. I'll be able to answer. All right. So let's continue. It wasn't even from you guys, it was someone else. All right. So yes, you can trade multiple accounts. Let's go to the next slide. How long does it take to receive payouts? How long does it take to receive payouts? Number one. So how long does it take to receive payouts? Now, it depends on the prop firm. All right. And that is why the example I used earlier is Funded Next. All right. Funded Next have this rule, which I like. When you apply for a payout and they fail to pay you out within 24 hours, they are going to give you an extra $1,000. So what I'm saying now is, let's say you place a withdrawal for $200. After making it to the funded stage, you've made a withdrawal, right? And then they fail to pay you out within the first 24 hours. When they are paying you your $200, they are paying you your $200, they are going to they'll pay you a bonus of $1,000 for wasting your time. So I think only Funded Next does that. I don't know if other prop firms have started doing that too, but I don't know. But I know if you even go to their website, you will see it there. All right. So how long does it take to receive a payout? Now, it depends on the prop firm. Some pays faster, some takes their time, because what they do is when you apply for a payout, they go back to your trades and see if you violated any of their rules, right? Because they're looking for any opportunity to not pay you. Trust me. They're looking for any opportunity to not pay you. So make sure you stick to the rules and the rules are there. So you can go through the rules and all of that. All right. So, but I think Funded Next pays fast. There are other good prop firms out there that pay super fast. And it depends on the prop firm actually on this question. So I think it's time to take some questions before we proceed. Please, if you have any question, just indicate by raising up your hand. I see Mr. Gabriel's hand is raised. I will just allow you to speak. If I allow you to speak, you need to unmute yourself and then you ask your question. I see Mr. Gabriel. You've been allowed to speak. All you need to do is to unmute your mic. Good. So kindly tell us where you are tuning in from and then your question.
All right. So good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Hello?
Yes,
Hello?
I can hear you loud and clear. Go ahead with your question. Where are you joining us from?
Yeah.
And then your question.
Yeah, good. Yeah. My name is Gabriel.
Okay. Nice of you to join us today, sir.
Are you with me, sir? Hello?
Yes, I can hear you.
Are you with me?
I can hear you. Yes,
Hello,
I'm
sir?
with you.
Yeah. Yeah, I'm currently in Shagam now, joining your live session. The question I want to ask is that yes, okay, fine. Most of I myself, I want to use myself as an example, I'm trying to prop firm and their rules. Their rules is what is giving me issues and concerns about.
I think we are struggling with your internet connection.
It's something you don't have details of it. There's one yes you can easily
All
hello?
right.
Hello?
Yeah. I
Hello?
think we
Hello?
we yes, I can hear you. I think
Hello?
we are having issues with your
Hello?
internet connection. Sorry, I'll come back to you. I think okay, if I get you correctly, so because we are struggling with your internet connection, so if I get you correctly, your question is around the rules with prop firms. So to be honest, first of all, in the beginning, when you're starting out, I'll recommend you go with a reputable prop firm. All right. We have some on our website, some prop firms that I recommend. Any of those ones should work, right? So what you should do in the beginning, the major rules to get to be familiar with, number one, go with two-step challenges in the beginning. Go with two-step challenges. Then the rules are simple. Don't copy someone else's trade. What I mean is when this, I don't know, maybe they have a software, of course, that's what they make us understand, that they have a software that can track all of this, which of course is possible. They don't want to see the same stop loss, the same entry, the same target. Now, if you share the same thing over a certain number of trades with someone else within that same prop firm, you're going to have problems when it comes to getting payout. That way, you violated their rules. All right. Then another thing is another major rule you should take note of is don't lose 5% of your accounts in a single day. And then most prop firms will tell you don't lose 8 or 10, depending on the prop firm, 8 or 10% of that account overall. So what I mean is if you have 100K, don't lose 8% of 100K. That means don't lose $8,000. Then if you also have that same 100K, don't lose $5,000 in a single day. Now, if you do any of those things, you have violated the rule. Then another important rule to take note of is what there's one other one. There's one other one I wanted to mention, just skipped my mind now. All right. So the rules are almost the same across board, especially when you're going for those two-step challenges. So don't violate the fact because statistically, I've mentioned this time and time again. All right, statistically, from the statistics we get from these prop firms, they tell us that most traders that violate their accounts, they violate the daily drawdown rule that states that you must don't lose that states that don't lose 5% of your account in a single day. Now, many traders struggle to calculate this percentage, and that is why you should use risk management calculators. I also have a video on that. I could share that. So, in this day and age, I'm still surprised that people ask, what lot size should I use? No, that's the wrong question to ask. The right question is, what am I risking? What percentage of my accounts am I risking on this trade? Personally, I don't look at lot size anymore. I don't even the trade I said that, because remember I said I took a trade earlier today that I lost, right? And I also said I'm coming off the back of 4 consecutive wins, which was 8%. The one loss today is just negative 1% on prop firm. So I'm still up 7% within last week and now. You get my point. Now, if you even ask me that the loss I took today, what was the lot size? I don't know. The only thing I can tell you is, hey, I knew the risk on the trade. The risk was 1%. I can't remember the lot size. So when you're trading, especially when you want to trade prop firm, you have to be disciplined. That's one of the benefits of trading prop firm, because it helps you stay disciplined. Because if you don't want to violate those rules, then you need to change your mindset from looking at the money, from looking at the lot size, and focusing on the risk per trade. So I have $100. I only want to risk $1 on this trade. I only want to risk $2 on this trade. You understand? So if you can do that, it's also going to plug that gap between you and your account violating the daily drawdown rules. Because statistically, like I said earlier, from prop firms, why people fail the most is because they violate the daily drawdown rule. All right. So if you can watch that, you'll be fine. All right. We're still going to have one more webinar next week. Maybe I'm still going to dive in. Maybe I'll take you to some of these prop firm websites, and then let's go through some of the rules so that I can break it down for you. Okay, so I believe that was your question. Your question was centered around rules. All right, then I see Mr. Isaac's hand is raised. Mr. Isaac, you've been allowed to speak. Kindly tell us where you're tuning in from and then your question.
Hello, good evening.
Good evening, Mr. Isaac.
All right, good evening, Mentor Shola.
Yes, sir.
It's a nice one today. I'm glad to be part of this class.
Me too.
Mr. Shola, please, I want you to really help us in this issue of prop firm, because a lot of traders, especially people like us who are just coming in to the industry, you know, one of the challenges that we have is capital. So I want you to really advise us. What is the easiest way that any average Nigerian can use as an approach to succeed in this industry?
Okay,
Let me
yes.
use myself. Let me use my. Sorry, sir. Let me use myself as an example.
Okay.
Let's, for instance, now maybe all I have on me, maybe all I have on me is like, let's just say 300K. 300,000 naira. Talking of the Nigerian currency,
Okay.
which is just barely $200. So even if I am to purchase a prop firm as a starter that doesn't really know how to trade by himself, you know, you may have to maybe you may have to rely on a mentor for signal or something. But I heard you mentioning that you must not copy trade. So that thing just made my heart, just keep a bit, because that would have been the easiest way, at least to raise the capital first before you can now start thinking of, okay, let me go for the mentorship so that I can
Okay,
have this knowledge by
let me
myself.
cut you a little bit so that I don't forget any of your question. I'll still allow you to speak. But you see, for that part, let's say if you must take a signal from someone, right, then you can, don't open let me put it this way. There are lots of prop firms out there, reputable ones for that matter. So if, for instance, you're taking a signal from someone that is using Funded Next, and maybe you are on the FIFAs, for instance, or FTMO, for instance, you can actually copy that individual's trade. It only happens when both of you are copying from within the same prop firm. So you are Funded Next, I am Funded Next. You understand?
Hello?
I needed to clarify.
Okay.
Yes, I can hear you. So I needed to
I
clarify
think
that.
I think that's giving me some level of relief, because that aspect, a lot of us really want to learn this thing to the core, but the financial implication is what scares a lot of people. So knowing that, okay, we can trade prop firm, but we should ensure that the mentor maybe we are following should not be using that same prop firm. I think that has also given me a fresh knowledge on how to go about it. Thank you so much, Mr. Shola. God bless you.
You're welcome. Amen. So, and to answer the first part of your question before I caught you in the middle, number one, when you don't have, you see, like I usually tell the guys in the mentorship, right? I usually say, hey, we beginner traders look at Forex like it's just a click of a button, you know? It's just it's just something that I just want to do this to make money. Now it depends. You can do that and it works for you. If you're looking at it as a side hustle, hey, I don't have money, I'm just looking for quick money. So you know what? There's this signal here. Let me just quickly pick this and do that. Well, it may work periodically, but that's the wrong approach. Now, as a trader, you're an entrepreneur. It's as simple as that. Now, in the real world, when trading is also in the real world, right? But I hope you get what I mean. In the real world, before you jump into a business, except you are greedy, right? But if you are not greedy, before you jump into a business, you do your due diligence. You want to look at the ups and downs. You want to look at the worst case scenario. Personally, that's what I do. Even in my other businesses, I don't know. I think trading made me that way. I look for the worst case scenario. You can't just pitch me a business and then pitch me with a profit. If you even do that, I will run away from you. I want you to start from the worst case scenario. How bad can it be? Because in life, we have ups and downs. As a doctor, sometimes, even if it's beyond your wish, you lose some patients and then you heal some patients. Sometimes you're on your way to work, you maybe engage in an accident, may not be a life-threatening accident, but you are this close, or maybe at your job, your actual job, sometimes you have down days, sometimes you have up days, so that's life. We have ups and downs. And that is exactly what happens in the market, because the market is just like a business also. It's just like you having a supermarket. Today you made crazy sales, then tomorrow is almost as if you are not even there. Like they can't see you. You are there, you are at that supermarket, you are open for business, but no one is even approaching you. It's just like you are invisible at that particular point in time. Right? So the same thing happens in the market. Now, if you want to do this long time, if you want to do this as a business, if you want to do this long time and you want to do it as a business, right, do the right thing. Make sure you get the skill. Though I'll talk about this in the next slide, how to pass prop firms faster, the conservative, the aggressive. I'll talk about that in the next slide because I think that should be the last slide. All right. So that's why I'm spending time taking all these questions. So do your duty. Because 10 years is no joke. If you want to trade, look at where do you want to be in this trading space 10 years from now. So do you want to be taking signals? Now, if you're taking signals, you don't even know who that individual is. Number two, it's just like you're just treating Forex as a side hustle. Let me just try this. Let me just try that. You understand? You shouldn't approach Forex like that. Give yourself time. Give yourself time. Get the skill. Backtest it. Know that you have something. Because any good strategy should be backtestable. I don't know. Someone cannot tell me otherwise because that's what works for me. Even whenever I tweak my own strategy, I still make sure I backtest it to see how it would have performed historically. Then that's where I now draw confidence from. That's where I draw confidence from before applying it in a real market. You understand? So you need to have a strategy because you want to do this long term. My major source of income is Forex. Yes, I have other businesses that I do, right? But my major source of income, what I don't play with the most, is Forex. Does that mean I don't have bad times too? Of course, I have bad runs too. Like I told you, I said I took a loss today on gold. All right. So please, I just want to correct that first part of the statement you made where you said, hey, I just want to do the no, you want to do this for the long term. You understand? That's the most important thing. So I'll take one more question before I go to the next slide. I see Mr. Ola. So Mr. Ola, you've been allowed to speak. So all you need to do is to unmute your mic and then you can speak. there's this mic button, you know, then you see this slash that cuts across the mic. So you need to tap on that button to unmute and speak. Okay. Mr. Ola is struggling. So I'll try one more person. I think I'll try Precious. Precious, you've been allowed to speak. Please go ahead, unmute your mic.
Can I speak now?
Yes, you can. Go ahead, please.
Okay. Good evening. So
Good evening. Please, where are you joining us from? And then your question.
okay, I'm joining from Port Harcourt.
Okay, nice to have you. How is Port Harcourt today? I heard what was happening there.
Police are not the rest, but this is my area. We are safe here.
Okay, that's good. All right, go ahead, sir.
Okay. So this prop firm, I'm with a prop firm of Marvin, been profitable
Okay.
for a year plus now. But I
Okay.
think I am having challenges when it comes to risk management. That's a $5K account. I've moved it to 300 and something, about 340 something. So
Okay.
remaining about just $60 or less for me to win it and pass. And I got into some bad trades and I dropped that account back to like just 5,020 something again. Now I'm growing it back. So what could
That's
be
break even.
what
It's
could be
simple. It's your mindset. It's your mindset. I mean, you were the one that took it to that amount and then you dropped it back again. So it's your mindset. So just focus on execution. That's what I always say. So focus on your execution, right? You executed till you got to that point. What were you doing till you got to that point? The truth of the matter is you can be $2 away from passing and then the next trade is going to be a loss. You did nothing wrong. I mean, if you have a rules-based strategy that you execute on, right? Your focus is on the execution, not the outcome. Your focus should be on the execution, not the outcome. So you focused on executing. That was how you made all of this money. Then it is normal to lose some. All right. So it could be that last trade that you're expecting to just help you cross over the line. And that's where the loss came in. It's painful, to be honest, because we are humans. There's no denying that fact. It's painful, but it is what it is. All right. You keep doing that because at the end of the day, sometimes you can be this close to passing the account, and then that's when the drawdown kicks in. It's possible. That's just trading. It's crazy. It's annoying. It's painful, but that's just the bitter truth. All right. But you just focus on that, your execution. If it's rule based, then just focus on it. The same rule was what made you profitable. I mean, if you were not trying to pass an account, you should have withdrew that money. You understand? So just focus on your execution. As long as it is something you've backtested and you can tell that it's a profitable strategy, focus on that and just ignore what happens next. That's me. All right. I have a strategy. It has paid me over the years. Then because of a bad run, just because I was this close to making this amount and then I went back down, I'll just focus on the execution, then balance my risk along the way. So for risk management, when I am in a loss, I cut down on my risk. When I am in profit, I double my risk. So let's say I am 10% up for the month, for instance, I can now start doubling my risk because I know that I can't go below. Even if I lose, I can't go back below 5%. If I go back below 5, I'll just pause there and withdraw my 5%. But when I'm in a drawdown, that is when I reduce my risk. Unlike what the struggling traders do, they flip it. When they are in a drawdown, that's when they increase their risk. When they are in profit, that's when they reduce the risk. And it's crazy. I wonder why. It's just like you're drowning and you say, hey, help me drown faster. That's what happens when you double your risk in a drawdown. So you focus on your execution and then let the trades play out. Simple.
Right. Further question on it, because when I was I focused on execution, and then I used the 0.2 positions and got to that stage. So I wanted to just get about 6 pips from a,
Mhm.
AU or this, just 6 pips so that it's going to complete at once. And that was where the whole
Okay.
mess happened. You know, that 6 pips I'm talking about is one standard lot.
Okay.
So
And
with
you've
that
not
one
been using
standard
one
lot,
standard loss.
no, what I used to get to that stage was 0.2. So I just
Was
said,
zero
let me
point
hunt
0.2.
for just
I wouldn't say what you did was bad actually. So I wouldn't say that
just a
because
6 pips
myself,
before, and I had a heavy drawdown of about 120 that same day. The next day,
whoa, whoa. Yeah, that's painful. That's painful. So what I would just recommend is I don't see anything wrong when you try to increase your risk when you are in profit because that's what you should be doing, right? But when you're in a loss, you shouldn't do that. So I wouldn't say what you did was wrong, okay? But it depends on what was the state, what your state of mind at that particular point in time. So it could be that, yeah, I could also increase my risk when I'm in profit, but probably you increased yours out of greed. I mean, you were this close to scaling, so why not just keep doing what you were doing? And if that it was even your first account, I believe you shouldn't have done that. And from the way you are even asking the question, I could tell that you already knew what you did wrong. So you already have your answers. You already have your answers. So I think just focus if what you risk originally, especially when it's the first your first account that you want to hold on to, I'll recommend just stick to your playbook. If your risk is 0.2% per trade, stick to it. You now start having more freedom when you now have more accounts. They allow this one pay for those other accounts. All right. So stick to your playbook. Don't try to gamble at this stage if this is your first account that you're trying to get to the funded stage.
all right,
If that
all good.
makes sense.
All
Yep. All right. All right. So that will be all for now. So I'll just go to the next slide real quick. Then I'll take the rest of the questions towards the end of the class. All right. So now the next slide is prop firm trading strategies, how to get funded faster. This is simple, right? Should I swing trade? Should I day trade? People don't know this. They always, I get these questions a lot. So what do I do? Should I swing trade? Should I day trade? How can I pass faster? And all of that. Now, I'll start with the fast or slow. I've said this before, but for the sake of those that are tuning in for the first time, I'll say it again. You don't have money, right? Let's say you don't have enough money to risk. I'll advise you go with the conservative approach. Buy an account, give yourself time to pass. I don't care if it takes 4 months, give yourself time to pass because it's a process. If you give, let's say the worst case scenario is give yourself 4 months to get funded and maybe make your first payout on that account. As a business minded person, you know you should reinvest. So let's say you started with a 10K account and you did 5%. Let's go with something small. You did 5%. Then they took their 20%, they gave you 80%, for instance, basic industry standard, right? They give you, let's say your take home is $400 from a 10K account after 4 months. It's small. I agree. Then out of that $400, take $200 or 200 plus dollars, buy a 25K account. Now you have 35K. You see that new 15, that's 20, sorry, that's 25K account. Give yourself another 4 months. You're already cashing out on your 10K account because you are now funded. So on average, if you can do 5%, you're getting $400 per month. For that 4 months when you are waiting for your first payout on the 25K account. Now, when that payout comes, combined with your 10K account, what does that give you rather? It's a lot of money, right? Depending on your country, of course, I know, but you get the the picture I'm trying to paint here, right? So that's 8 months gone by. You've achieved 35K in capital. 5% of 35 is 10% is 35. So 5% will be half of that, about not up to 25, yeah, about 1.7 or so, 1.750, right? In 8 months, you've started achieving 1,750. Now you reinvest that money, give yourself another 5%, another 4 months to pass. In 1 year, you're already earning a basic salary. I mean, depending on the country where you are, right? Because if I'm saying 10K, I'm talking about for those that can only afford 10K. So someone else's 10K can be someone else's 100K. But I'm just talking about giving yourself time, if you know what I mean. So you do the maths on your own. All right. So that's for conservative approach. That's if you don't have enough money to risk on accounts. But for me, currently, I do the aggressive approach. So I could buy 5 accounts or set aside money for 5 200K accounts, for instance. I know that I could blow 3 accounts, and that's where I go aggressively on prop firms. Remember earlier I said I risk 1% per trade. That's on the funded account. That's on the funded account when I'm funded, when I'm beginning to trade responsibly. But on the challenge phase, I go aggressive. I could remember earlier I said you are not allowed to lose 5% in a day. But for me, I will risk 3% on one trade because I'm doing it aggressively because I feel like I can blow some money. I don't care. I just need 1 out of 5 to make it to the funded stage. And that one, my first withdrawal is going to cover for all the money blown and even profit. Just imagine I set aside $5,000 for 200K accounts and I lose 4. That means technically I've lost $4,000. And then one makes it to the funded stage, right? And then I make 5% on that account. 5% of 200K is 10K. Then let's say my take home after they take their profit share is 8K. I only lost 4K. Deduct the 4K from the 8K. I still have 4K. And again, they are going to refund my 1K. The 1K I used to purchase that account that made it to the first payout. They are going to refund it back to me. So I have 5K. It's a good business if you ask me. And then I have that account to myself now, and I'm going to continue making withdrawals from it because I apply proper risk management. You understand? So it depends on what you want. If you don't have enough money, go through the conservative route, risk small, give yourself time. That's what it's going to take. If you risk small, then you have to give it time. Don't put one of the mistakes many traders make is I want to pass this account within the next 1 week. I want to pass this account within the next 1 month. No, you can't give yourself time frame. It's wrong. When you do so, you've given yourself that mental target. Now you are looking for what is not even there in the market because you want to hit your target. All right. Like I said earlier, trading is just like you having a business. So today you have very great sales. Tomorrow, sales slows down. You have little to no sales at all. That's how the market works. Right? Today may be very good. Tomorrow may be a bad day. So then you also want to decide if you're a swing trader or a day trader. So this depends on your trading strategy. For me, on prop firms, I like to use my day trading strategy. All right. Very simple rules based and all of that. All right. But when I'm trying to pass an account, I don't even mind using the swing and the day trading strategy. I can combine both depending on which trading opportunity comes first. All right. Another way to pass faster again is, the first way I talked about, I risk 3%, which is way too much, right? But I'm already aware of the fact that I could blow some. But another way to do it constructively, right, or professionally is, let's say for someone that is risking 0.2% per trade, you win the first trade. I recommend that's if you know what you're doing, if you have the skill, if you have a rules-based strategy that you know that is profitable, that's when you can do this, right? So let's say you risk 0.2% per trade. Now, if you take the first trade and lucky you, it was a winner. On the second trade, I'm saying this can only be done. Don't do this on a live account when you're already funded. Just do this when you're trying to pass, right? So let's say you take the first trade, 0.2%, you pass. Sorry, it's a winner rather. Then on the second trade, try to risk all that profit you made. So if you did 0.2% and you are somebody like me that likes 2 to 1, so if you risk 0.2%, which means you made 0.4%, on the next trade, risk 0.4%. If you lose it, of course, you are back to break even, right? So go back to your 0.2%. If it's a winner, risk the whole 0.4% that you made if you go for 2 to 1. Then if you made a profit, let's use 1% risk per trade. Personally, on my funded accounts, I use 1% risk. So let's say I risk 1% and I go for 2 to 1, I make 2%, right? I'll risk the whole 2% on the next trade. And if lucky me, it is a winner, that means I now have 4%, including the other profit. So I need only one more trade to hit my first target, to pass the first challenge. If your profit target is 8%, I think, which is the industry standard. Some will say 10%, but most is 8% profit target, you know. So that's another way to do it conservatively, but know how to balance the risk. If you win, increase. If you lose, reduce. Just look for a balance in between. But of course, you need to have a solid trading strategy. So how do you become a consistently profitable trader? Get the skill first. Don't just want to jump because you see everyone making money. Get the skill. It's going to help you in the long run. Then backtest the skill. There's no time I don't talk about backtesting. Backtest this. People skip this part a lot. Backtesting is just like you doing your research, your due diligence on that new business idea that popped up. Okay, where is the best place to set up this business? Where can I get cheaper wholesale products? How can I sell for better profit? That's backtesting in Forex. Now, backtesting helps you see the secret or know the secret, exposes the strategy itself. And that is why any strategy I teach can be proven, because how? You can go and backtest it and see for yourself. You will know on the spot if it is profitable or not. You will know on the spot if you should adopt it or discard it. All right. So apply proper risk management, because this is also very important. You don't want to be losing and increasing risk. You are in a drawdown. How's the right time to increase your risk? Are you kidding me? Only increase your risk when you've created a buffer on your account. You now have enough shock absorber to absorb any losses that come. It's not when you're drowning and you're looking for someone to sink you faster. When you're drowning, you're looking for help to come above the water, right? To float, for any support. But most people in trading, when they're drowning, that's when they even look for something that is looking for someone to wrap a stone around their leg so that they can sink faster. You know, so you need to understand how to balance your risk management properly. And also, don't guess lot size. Instead, determine what you want to risk on the trade. Of course, you can't determine what you want to risk on the trade on the $5 account, except if you convert that $5 account, if you put it into a cent account, which will give you about 500 cents or so, right? So except if you convert it to a cent account, but if you put it in a standard brokerage account, you can't tell your risk management calculator to give you a 1% risk on $5. The calculator is not going to see it. It won't be able to read it. All right. So instead of looking for lot size, hey, what lot size should I use on this? Ask yourself, how much of this capital am I willing to risk on a trade? That's the right question to ask. And that way you will notice that lot size becomes insignificant. And I have a video on that on YouTube. It's free, where I talked about risk management calculator. All right. So when I want to get into a trade, I just put my stop loss, tell the calculator, hey, this is the percentage I want to risk on this trade. This is my take profit. And then I enter the trade. It automatically determines my lot size, which I don't even look at. The only thing is when I hover my mouse on my stop loss value, I want to see that it's the amounts I'm really willing to risk on the trade. That's what interests me. All right. I'll take questions very soon. But for those that wants to take this to the next level, maybe learn our skills on whatever, our next course was supposed to start on the 17th, but we moved it up 1 week. And we are going to be commencing next Monday. And currently, we are offering a 15% discount for the first 10 registrants. Sorry to those that already booked their spots. All right. Sorry to those that already booked their spots. Sorry to those that already booked their spots. All right. This is just for this webinar. All right. So, yep. If you have any question, please indicate by raising your hand. That's the last slide for today. We'll just take like 2-3 questions, then we'll call it a day. I see Mr. Joseph's hand is raised. Mr. Joseph, you've been allowed to speak. Kindly tell us where you're tuning in from and then your question. You need to unmute to be able to speak. If you're there, Mr. Joseph, you need to unmute to be able to speak. And if you're struggling to speak, you can send me a message on WhatsApp or DM me on Telegram. Maybe leave a voice note if that will be faster so that we don't keep others waiting. All right, I still see some hands raised here. Mr. Gabriel was trying to speak earlier, but couldn't because of the internet connection. You've been allowed to speak. So all you need to do is to unmute yourself and ask, please. All right, I see Fava for
Okay.
Fava
Thank you
FX.
for another opportunity given to me. Thank you.
Okay, all right. Go ahead, please.
Hello.
Yes, I can hear
Yeah.
you. Go ahead, Mr.
The
Gabriel.
question I want to ask, the question I want to ask you now is on the loss side. Loss side is when you
Okay.
are. There are some people that is okay fine that they say you are not being. Take for example, okay fine. You are talking about risk management, risking 1% or thereabout. Maybe yes, okay fine. In a
Yes.
situation where it's okay fine, I've stipulated my. I've stipulated my entry as okay fine. Risking 1%. But in a situation where it's okay fine, I see that the trade is moving in my direction. And according to some prof firms, they say you're not consistent with your losses. That they use down also to disqualify people. What can you say about that?
Okay, you're talking about the
I hope you
consistency
get my question, sir.
rules. So personally, I don't go with those consistent. Yes, loud and clear. So personally, I don't go with those consistency rule garbage. I really hate that thing. I don't know if some people know how to use it, but personally, I just go for two-step challenges. And if a prop firm is telling me about consistency rule, I stay far away from them. And if you are starting out, right, I will recommend you stay away from them in the beginning until you properly understand that. Because trust me, at this, even till this point, I don't understand that consistency rule. I'll be honest with you. All right, I don't understand it. I've tried to go through it, but I really can't come to terms with
Hello,
it.
I hope you
Like
get my
it
question.
confuses me. Yes, I'm already answering the question, sir. So I always struggle with it. All right. So, but the firms I trade with, the accounts I trade right now doesn't have those consistency rules. So go through the prop firm, go through the package you're trying to pay for and see if they have the consistency rule, right? If they have the consistency rule and it confuses you, stay away from that. All right. Personally, none of my accounts involves anything consistency rule or whatever. I don't trade consistency rules. All right. Because I don't even understand it and I can't trade something I don't understand. That's just the truth. All right. So for now, stay away from all those consistency. If it confuses you, just stay away from them. That's what I do. All right. So Mr. Fava, I don't know if I pronounced that
Hello,
right.
hello, please, can I talk now?
Okay, Mr. Joseph, you are here. Please go ahead.
Yes, thank you so much. You've been amazing. This is the first time I'm joining. I just got on Telegram and saw something live. I said, oh, let me just join, and it's been insightful so far. Thank you so much. Okay, so
Appreciate that.
you were saying something earlier about someone trading a prop firm and is close to passing and then goes back down and all of that. I currently trade a prop firm account of 100K, 100,000. I'm still in the phase one and I started January, I think January 15. And then I
Okay.
go to 105 first of all. Then I went back to
Okay.
drawdown of 95, 95K. And then I started
Wow.
growing it again. The most painful part is, and I'll go to 109,700. 109,700. And I had
Yeah.
$300 left to pass. And then I moved back to, I now had this losing streak. I moved back to 100,000. So as
That's
I'm telling
crazy.
you now, the account as of today, today's end, I made just $1,200 today, and the account is at 103,000 right now, still in phase one. Okay, and then again, you
Hmm.
talked about the consent. I'm coming to my question though, but you talked about consistency
Okay.
rule. Let me just explain it. You said you don't know what it is. Okay, consistency
Yeah,
rule.
please.
For instance, my prop firm that I trade, they have a 45% consistency rule, and I trade an account of
Okay.
100,000, and the first phase is one. I'm supposed to get $10,000 profit to grow it by 10,000. So consistency rule, which is
Okay.
45%, means 45% of 10,000 is 4,500. So I'm not permitted to
Okay.
make more than 44,500 any trading day. So because of the way they calibrate their time by 11 p.m. Nigerian time, because I live in Asaba, Delta State, by 11 p.m.
Okay.
Nigerian time, they will recalibrate and that's a new day. So if I start trading
Mm.
by 11 p.m. this night to 11 p.m. tomorrow, whatever I make through that period must not be more than 4,500. That is the 45% rule. And what actually discouraged me
Okay.
and got my psychology down was as I was trading, getting to that 109,700, I made more than 4-5 in some of the days. And so I breached the
Wow.
consistency rule. They will not take the account from you in this prop firm, but because you have made that money, you are not meant to make 4-6 in a day. You are not meant to make 5,000 in a
You
day. So
you can
by the time I
imagine.
go to 109,700, I got a message that for about 2 or 3 days, trading days, I've breached the consistency rule. I made more than 4-5 of on those days. That so my new target for phase one is now
Hmm.
11,600 instead of 10,000 because of that
You see, this is
consistency
what
rule. They
pisses me off.
increased my target. So while I made 109,700, thinking I had just $300 to make, by the time I checked, I still have about $1,906 to pass. So that thing affected my psychology a lot.
Of
And
course, it will.
if I'd been wise, I'd have just stopped trading. So that same night, when they recalibrated at 11 o'clock, I say, if I could make 1,500 or 5,000 in a day, how much is 1,906 that I'm giving you? That's why I pack lot size. I pack lot size. I wanted to trade EJ. I pack what I put for EJ. EJ danced with me that night. In fact, this is I'm telling you, because actually, I've been trading my own money over time. This is my first
Yeah.
prop firm, and I just paid
Oh,
$600 and got 100K account, thinking, okay, if
yeah.
others can, I can. I've been trading for a while and all of that. So that thing affected me. I almost got ill. So through that
I can
period,
imagine.
if I know what I know now, if I'd had this experience before, I wouldn't have even traded through that period. But I lost that
Yeah.
same night. I was trading the next day. I was trading, and the account was going down, and it got back to
Yeah.
100,200. And as I started growing it, currently I'm now at 103, 100 as at close today. I don't want to trade again today. By 11 o'clock now, they will calibrate. So your
Oh,
information has been so wonderful, and one thing I've learned this night is you were talking about if you pass your account, your first withdrawal, secure another account, buy another account. I didn't have that in mind before. I was
mm,
thinking, man, I get my first payout, I go first go one place, balance will invest because it's been stressful. I won't lie
yeah.
to you, it's stressful. So, sir, thank
Yeah.
you very much. I hope I can keep joining this session and all of that. And I don't know, do you have other, this is now my question. Do you have
Okay.
other platforms where, you are sounding like someone who is very good with trading? Some of us, we just see they try, they struggle, they come. So if you have any other platform where, we could join, learn a little bit more, build a traders community, we share ideas and all that. I would love to be a part of that. Thank you very much. I know I've talked plenty. I'm sorry,
No, no,
guys.
no. You
Thank you
made
very much.
sense. No, no,
Thank
you
you
made a
very
lot of
much.
sense. I
God bless
appreciate
you.
that. Amen.
Thanks.
So first of all, I want to appreciate you for breaking down that consistency rule thing. But
All
it's
right.
just something
Thank
I've
you.
always hated from the beginning because I've been trading prop firms for, I think I started trading prop firms around 2021,
Um,
2021. Because I
Bros,
heard
you're
about it
veteran.
2020. I heard about it 2020, but I thought it was a scam. Like, how can you pay this little to get to trade this much and then expect them
Yeah.
to pay you out? Like, I'm like I always say, I'm too conservative. Sometimes it's a blessing and a curse. So sometimes I just look at it like, no, it's too good to be true. I won't fall for this. So that was why I started. It was in 2020, I can't remember vividly, but I think it should be 2021 if I'm correct. So
Wow.
right from that time, I've been hearing about this. I think consistency rule started coming in 2022 or 2023. I can't remember vividly.
Mm.
Okay. So I can't remember vividly. Someone is sending me a DM actually. That was why I stalled a little bit. So I can't remember vividly, but that consistency rule has been something I just hated. Like, one thing about these programs, to be honest, I said this earlier, that they try to trap us. They don't want to pay you.
Yeah.
That's the truth. Even the reputable ones don't want to pay you. They're looking for any excuse. If you give it to them, they're
Mm.
going to take it. Now look at your account. Number one, I want to say you are doing okay already. I mean, you've been holding the account since January, and this is March. Okay, even if you've not passed it, but you've not blown it, that's a good sign that
Mm.
you are doing the right thing. Then,
Yeah.
secondly, you would have passed it, but look at all the roadblocks that came along the way. They now increase your target. There was some money that you actually made, but it won't count. And of course, what
Exactly.
happens?
That's the most
Yeah,
annoying part. Oh, God.
yeah. So from there, what happens is going to take a toll on your
My
psychology.
psychology. Kai,
That's what's
Kai. That's
definitely going to
yeah.
happen.
Crazy. Kai.
It's just like trading, going through phase one, going through phase two, making it to the funded stage. It's time to get your payout, and they say they won't pay you out. Do you know
Kai.
the pain it takes to now buy a new account with a different prop firm and start from phase one again?
Kai.
It looks
Start
like
all over. What I've
yeah, so it looks
suffered
like
already.
this very huge mountain to climb. So that's why
Yeah.
I think in the beginning, especially when you're trading your first account, I think it's personally, right? This is my personal opinion. It's advisable you go with, for me personally, I like the two-step challenge. So the rules there are usually straightforward. Where complication starts getting in is when you are going for instant funding. They start giving you some weird rules and all of that. But when you're going for two-step challenges, there are rules also, but they are kind of milder and more straightforward. So they
So
will tell you
sorry if you can,
this
what's the difference between two-step challenge and
one
what do you
step.
call it? One step.
Sorry,
Because this
sorry,
one
the
I'm
instant
doing, there are
funding.
two phases. Instant funding, yeah. Because this one I'm doing is also two phases. First phase is to get 10,000 profit. Then second phase is to
Mhm.
get 8,000. Is that what you mean by two steps? Or what's the
What prop
difference
firm?
between
What prop firm is that?
Fonda Pro?
Okay, Funded Pro.
Fonda, FUNDERPRO, Fonda Pro.
Fonda Pro. Funny
Yeah.
enough, I've never heard of them, to be honest.
Oh, really? Wow.
Yeah, never looked them up.
The
You know,
reason
there
why
are
I
lots of
opted
them
for
these
them is
days.
because the reason I opted for them is because before I do anything, I do my research a lot. Their
Mm,
payouts is so wonderful. Like you don't have to wait for 2 weeks or they pay you once a month or twice a month. You can make the money today and withdraw it today. Every time you can even place withdrawal twice in a day and
mhm.
they pay like that. And the funny thing is, once you pass your for instance, this account I bought for $600 now. If once I pass it and I make my first money, as long as I'm withdrawing up to $50, my first withdrawal up to $50, they are going to pay me back the money I used to buy this account from my first withdrawal. So if I'm withdrawing let's say $100 for the first time, they're going to pay me $700. They're going to pay me that $100 plus the money I used to buy the account. They collect
Yeah.
20%. They give me
Okay.
80%.
It's basic
And they
stuff.
pay out.
That's the basic
Yeah.
stuffs in the prop firm industry. Even if you buy with Funded Next, for instance, that if you go with their two-step challenges or FTMO or any of the other good prop firms out there, once you make it to your first withdrawal, not all of them, but at least statistically found, based on my experience, 90% of them will refund your capital. Even Funded
Oh,
Next, if yeah, with Funded Next, even if you let's say you use our link, our coupon code, our link and the coupon code. When you make it
okay.
to your first payout, they are going to pay you, I think, I've forgotten. It's been long, I checked. It's there on the internet. It's stated there clearly. If you go
Funny
to
enough,
our website,
I joined the competition on Funded Next too. That January that I started trading my prop firm, the competition I did on
mm,
Funded Next, I made about $15,000. I probably
yeah,
if it was to be my I don't know, but I'm very relaxed trading the Funded Next, and I was just laughing at myself that the first month I couldn't pass my very serious account. The competition account I made 15,000, and the prop firm account I'm supposed to trade to be getting money for myself. I didn't pass
mm,
it. So I was just laughing. I made about $15,000, and this one, the first month I make 105 before I went
yeah.
back to draw down of 95 and drew it back to 109 and now back to 103. It's just crazy. So you've not explained what the two step and fast track and what did you call it again?
The instant funding. So
Instant.
the instant funding usually comes with a lot of hidden
Oh,
rules. So that's where you start seeing stuff like consistency rule. You cannot do
okay.
this, you cannot do that. The target sometimes will even be higher and all of those things. So all those complications, I don't like it because that's the umbrella they are going to hide under to mess you
Mm-hmm.
up in the future. So the clearer the rules, the better for me, because these things takes time. It takes our time, our emotion. So you want to
Yeah.
get on there. For me
Yeah.
personally, right now, I know I have a decent holding when it comes to prop firm, but my major source of income is even from my personal accounts because one good thing
You're
I
an
did is
veteran for this
whatever
thing,
what
my friend.
Yeah, so whatever you make from your prop firm, it's always advisable to build your own personal portfolio because that's how
Yeah.
you scale faster. And because these prop firms they shut down on us every single time. And why I
Mm.
picked it as a topic for today's webinar is because I know that many people, even those that actually have the money to like put in a brokerage account and trade it, they don't want to be too
Mm.
exposed, so they will just go the prop firm route, you know. So instead of
Yeah.
putting life 10,000 actual capital in a brokerage account, I
Mm.
could get 100K account for just $600 or 500 plus,
Yeah.
depending on the prop
Yeah.
firm and how expensive they are. All right. So, but anyways, I believe I've been able to touch a lot of topics
Yes,
today. Our
sir.
time is fast spent, and this video will be uploaded on YouTube. I don't want it to, it's already too lengthy actually. Hello, good evening. Please, I have a question on the maximum drawdown and overall drawdown. Well, depending on the prop firms, this differs. So, but for drawdowns, we have two types of drawdown, at least for the pack, the type I trade, the two-step challenges I trade, right? So we have the daily drawdown and we have the overall drawdown. Now, daily drawdown is something like, hey, you are not allowed to lose X amount of percentage of your account in a single day. All right. So industry standard is usually around, some will tell you four, some will tell you five, but mostly five, at least with most prop firms. So 5%, you are not allowed to lose 5% of your account in one single day within 24 hours. All right. Then overall drawdown is, okay, today you may lose 2%, tomorrow you lose 2%, next tomorrow you lose another 2%, that's 6%, right? Then the fourth day you lose another 2%, that's 8%. So if the prop firm states that, hey, you are not allowed an 8% overall drawdown, now if you lose like that, totaling like 8% over like a couple of days, you have violated the overall drawdown. So maximum drawdown and overall drawdown, they're actually the same thing. Maximum drawdown, overall drawdown, they're actually the same thing. So daily drawdown is the one they will say, hey, you don't lose this amount in a single day. Overall or maximum drawdown is the one that's, hey, over time, cumulatively, don't lose this amount. Then that thing I want to touch on when choosing a prop firm before I'll close with this is, please, if you're starting out with prop firms and you don't understand the rules properly, I recommend you go with balance-based drawdown. Look for this thing when you're choosing a prop firm. Balance-based drawdown. Don't go with equity-based drawdown. And I will explain briefly, then I'll close with this. Equity-based drawdown is funny. I mean, you could be, let's say you buy a 100K account. For easy calculation, you buy a 100K account and you are up 5% today. Let's say you got into the trade in the morning today, right? If you're in Nigeria, I'm in Nigeria right now, right? So let's say you got in the morning, in the evening, you are up 5%. So which means if it's 100K, you are up 105K, right? I'm explaining equity-based drawdown. So the next day, if you hold that trade into the next day, and that $105,000 drops back to 100,000, you have violated the account. You will lose the account. That's equity-based drawdown. All right. Whereas balance-based drawdown, even if you are up $105,000 and you hold the trade into the next day, you can afford to lose that $5,000 back to 100,000, break even, right? Then you now have to lose from 100,000 down to 95,000 to violate that daily drawdown. You shouldn't even be doing that, but I'm just trying to explain the difference between equity-based drawdown and balance-based drawdown. All right. So when you're starting out, I would recommend you go with balance-based drawdown. Avoid equity-based drawdown for now. All right. I'm still getting a lot of messages. All right, so I may not be able to answer all of them. I can see Martin. Let me just take a greetings. Okay, Mr. Martin from Uganda is telling us that there is a new account with Funding Pips that they have a new package within fundingpips.com that the instant account, you pay no passing through the one step or two step. Thank you. Okay, I'll look into that. I'm not well informed on this yet. I'll look into that. Thanks for bringing that to my notice. I really do appreciate. So, this is where we're going to be drawing the curtain. I still see Mr. Fava FX. My goodness, I'll take one question. We have, okay, I'll just say we have 5 minutes. All right. So I'll allow Mr. Fava FX to speak. Because I remember I've muted him back over and over. So go ahead, sir. Tell us where you're joining from, and then your question.
Good evening.
Good evening, Mr. Fowler.
Mr. Shola, thank you very much. It's me, MCI Pencil.
Oh, that was a lot. Okay, good to have you here. Yes, go ahead, please.
Yeah, thank you very much. Like I really enjoyed this webinar today. Like, there's one of my friends I actually sent the link to today, but he was unable to join us because I wanted him to actually understand this profile of a thing, because this as a new being in this Forex industry, if you don't know how to handle profile, you cannot handle money as an investor's money.
I agree.
So yeah, my question is this: over time, like I started trading profile account. Thinking from that 2021, you said during the period of this MFF. Is it MFF?
Yes.
Yes. Yeah, MFF.
I started with MFF myself.
Yes, I started with MFF as well. That time it was you are given 1 month to pass first challenge, then 2 months to pass phase 2 challenge. So I trusted that profile. Over time, I think they were taken to court, something like that. Something happened, then they fold up. So over time, other profiles started coming out like this. The next step from there, this one, that one, that one. I did a lot of proofing with the trust I had for MFF. So at the end, I will not get payout. So the last one I did, it was Cosumate. Yeah, we all know what happened, because that was a very big scam. Like it's so painful. Like we don't have a body controlling this profile of a thing. Nobody is taking them responsible of their actions. They just take our money and they go into the thing without nobody questioning them, that kind of stuff. So my question is, how do you know a good profile? Because I actually do some research. Said any profile that does not have a broker is not a good profile. Any profile that has broker, like, I'm confused. I really want to know. I believe even some of us here does not actually know this ability to know a good reputable profile.
All right, it's a good question. So me, I'll just explain based on my own personal experience. You see, I'll take from the last part. They said a prop firm that doesn't have its own broker you should stay away from those types of prop firms, while the ones that have their own you see, there are two sides to this coin. All right, so someone that has his own broker can manipulate things from the back end also.
Okay.
Yes. I've seen people, they are sleeping. I think I got a lot of complaints. I think during that consummate, I never recommended that prop firm anyways, for my personal reasons. So I won't go into details on that. But people gave me feedback that they were sleeping and they were placing trades on their behalf, and it's crazy, right? And why did they have the ability to do that? Is because they own the broker. Do you understand? So yeah, the broker comes with a different name, but they were able to manipulate things from the back end. So there are two sides to that coin. Sometimes it can be good, sometimes it can be bad. But personally, the way I choose prop firms is this: I look at their track record when it comes to payouts. Okay. So I want to see how many people have been paid out. Because at the end of the day, that's what matters. That's the only thing that matters, the payouts. Do they have enough money? Because if you cannot pay out, I don't care how good your rule is. I don't care how nice or whatever it is that you're promising within your rules, however enticing they are. I'm not interested in all of that. When I make it to the funded stage, do you have the capacity, the ability, the integrity to pay me?
Yeah.
That's all that matters. Because you had no problems giving them your money. Do they have problems paying you when you meet up the obligations required of you as a trader? Pass through phase one, pass through phase two, pass through the funded stage. So do they have the money? FTMO is up there,
Yes, of course.
and they've been
That's
around
plenty.
for a while. Then the Fifers, they've also been up there. I think the Fifers is even older than FTMO, I think with a year or so. And for the fact that they've been around this long, I mean, they should have gone under if they don't have the capacity, the ability, the money to pay out traders. Prop firms I run away from are prop firms that popped up 1 month ago, 2 months ago, 3 months ago. Even if I decide to trade with them, I'm already aware of the risk and I won't be surprised, and it will not affect my emotion if I don't get a payout. Because I already expect that, hey, these guys, they are just popping up and they may not have enough money yet. Because the truth of the matter is, how do prop firms make money to pay out traders? The bulk of it is coming from failed accounts. That's just the
Yeah.
bitter truth. No one is copying your trade. I don't know you. Can you just copy a random person's trade? Like, come on. You can't do that. So the truth of the matter is, how do they make money? They make money from failed challenges. They know that 95, 96, 97% of anyone that buys a challenge is going to blow the money, and only 3% are going to make it to the next payout phase. So we'll take some commission from here and pay this out. And then if they are a reputable prop firm, that means they have more customers, which means they have more liquidity from failed accounts. And that's why if you're starting out, if it's your first account, I always recommend go with from funded next, FTMO. The FTMO is quite expensive. That's why people run away
Very
from
expensive.
FTMO.
Yes, yes,
But they are
it's
the best.
expensive.
Funded
And they
next,
have a lot of
FTMO, the
no need
Fifers.
trading.
Yeah. So no new. Personally, I don't even trade because there's a news around the corner. So
Yeah.
if my strategy is telling me, hey, get into a trade here, and there's a timestamp to all my decision in the market. So get in around this time. So I'm not trading because hey, there's a news in 1 minute. So that's why that rule doesn't even affect me. It's true they have that rule, but it doesn't really affect me because I don't trade because there's a news around the corner. So FTMO, the funded next. There are other good ones, the Fifers, even funding pips. They are doing well. At least they have good traffic. So you want to look for prop firms that pay out. There are lots of them. We have some recommendations on our website and all of that. And if you need more information, you can always send me a DM. Yeah, I may take 30 minutes before I reply, but I will
Yes.
definitely reply the DMs.
Oh.
So, yeah. So that will be all today. Thanks for all the questions. Thanks for tuning in. And thanks for those that joined from the beginning till the end. The session is recorded anyways, and the recording will be available tomorrow morning. All right. So thanks for tuning in once again. And I'll see you in the next and last webinar before. That should be next week, same time, Wednesday. All right. We could also talk about prop firms since I discovered that we enjoyed the topic. This time we'll pick some prop firms and analyze their rules together. And hopefully Mr. Joseph is also going to explain better that what do they call it? The consistency.
Consistency rule.
Yes. Yeah, the consistency rule. So I'll want to, because there's why I want to understand that consistency rule. I was talking to, because we concluded the evening session of our last mentorship, the cohort for last mentorship. So I promised them that there's this prop firm I saw. They are even trying to partner with me, but I'm still looking them up. I don't just want to bring something to the public space and then They are not worth it. What's the name of the prop firm? What's the name? What's the name? What's the name? Just keep my mind. It's a one step. It's a no step challenge. It's instant funding, but I love what they are promising. But it has that consistency rule, which I wanted to understand first before I invest in it. What's the name? I mean, they are reaching out to me currently. How can I forget their name?
Wow.
I'll look at
No
them. I'll
step
look.
at all. Are you
What?
serious?
You
You
said
said
what?
no
Yeah,
step
no
at
step.
all.
No step is a zero step
Wow.
challenge. It's instant funding,
Wow.
and they are going to pay around 80%. Because one thing I hate instant funding for is their payout is usually lower than 50%. But these guys are promising even 70, 80% payout, and
What?
it's a no step challenge. So I wanted to look them up, but I really didn't understand the consistency rule that marks the whole thing. So we could look at it next week together. So we'll go dissect
Oh,
these rules
that'll be
and
fine. I can't wait for next week then.
we'll analyze it. Yeah. All right. Thanks to everyone once again. And yeah, that'll be all for tonight. I'll see you. Sorry, I
Thank
see
you very
Mr.
much. God
Joseph's.
bless you. Thank you.
Amen. Yes, sir. So I see Mr. Femi Joseph and is sorry. This is how far I can come tonight. We'll reconvene same time on by next week, Wednesday. All right. So yeah, good night, everyone. Bye.
Good night, sir.
Good
So,
night.
yeah, bye.